Hi, I'm Thomas, and I'm working in the finance industry nearly for 10 years right now. I'm developing trading and investment strategies for several years because I'm interested in trading on financial markets from my 17, and my main goal is set up my own algo trading desk and my investment fund. Making money by trading is much more challenging every year, and it's a very competitive industry. So you need have a good edge, and for me that edge is knowledge. If you treat trading as a business, sharpening your skills and knowledge is absolutely must. I wanted to learn a more statistical approach to analyze and to research financial data, then learn how to use Python and R for trading system development and use in quantitative finance, and then the real examples of the real quants and basic concepts and trading strategies used in real markets. The biggest benefit of the EPAT training, I mean, it's an in-depth curriculum and very well structured lectures with assignments where you can evaluate skills you learned and use it immediately and get feedback from the real practitioners. Skills I learned in EPAT program I'm going to use in my own trading system development to build up some more robust models and attract some investors and start up my own algo trading desk. In my opinion, EPAT training, it's a most comprehensive educational program on algorithmic and quantitative trading I have ever seen. So I mean, if you are serious about quantitative trading, it's the best place where to start.
Welcome once again, everyone. It was a pleasure to have you all yesterday as well, and thank you so much for being such a wonderful audience. My name is Pawan, and I'll be your host for today. I'm sure that all of you are excited about today's session, wherein we are going to cover what all you have been waiting for: test driving a trading strategy on a research platform. I hope all of you have signed yourselves up in the Blueshift platform. If not, you can do so right now for free on blueshift.quantinsti.com. The link is also posted in the chat for you. Finally, you will be applying all the concepts which you have learned in the past 2 days, and I'm pretty sure that this might just be the most exciting part of the workshop for all of you. Just like the last 2 days, we will also cover all your questions at the end of the session, so make sure you stick around until the end. I would love to have the pleasure to pass the stage now to today's speaker, Mr. Jay Parmar, and I hope you all have a wonderful learning experience. Over to you, Jay.
Thank you, Pawan, for the introduction. I hope I'm audible loud and clear. In case not, do let me know. And I also hope that you guys can see my screen. Right. All right. Everyone, thanks for joining in. And I warmly welcome you all to this particular session. We will be test driving the strategies and the concepts that you learned in past 2 days. A bit about myself. So I work as a quantitative researcher and a faculty in QuantInsti. I also trade algorithmically in Indian markets, and I enjoy developing quantitative models. So that is something that we are going to see today on on a research platform called Blueshift. Right. Okay. So this goes without saying. Anything that we will cover in this particular lecture or whatever concepts that we will discuss, right, is merely for the informational and the educational purpose. Be diligent whenever you use any trading activity, and whatever content that we present today should not be considered directly as a trading advice. Now, that being said, this session is going to be largely hands-on, meaning you guys can perform the things along with me on a platform called Blueshift. All you need to do is go to the Blueshift and log in yourself. If not, you have already. We will try to build a complete trading system using the concepts that you guys already have gone through and understand in past two sessions, that is yesterday and the day before. So the way we will work today is, right, we will start with the recap of what the process that you guys learned yesterday. Then we will have a brief understanding of the platform that we are going to use, and after that we will see the systematic strategy design cycle, and later on we will go and try our hands on creating this strategy and basically making all those strategies and coming up with a sustainable trading system, right? And that is what we as a quant researchers are always in seek of. So yesterday, you guys went through the quant research process, and you learned by seeing a kind of an example wherein we came up with the simple idea that we go long on our strategy, or we go long on a particular stock if the RSI, that is the alpha that we try to came up with, right? The RSI that we had used as a technical indicator, right? It was one of the alpha source for us. We go long on a stock whenever the RSI is greater than some threshold value. So yesterday we used that value of 60, and later on we went ahead and tried to optimize it and see, okay, how we can optimize particular value, right? And we exit the position, or we exit the long position whenever the RSI drops below 40 or whatever the threshold value that you guys have chosen, right? So yesterday you guys have seen this kind of chart. So here the orange line shows the RSI and the blue line shows the position. So again, as we discussed yesterday, it was a long only strategy, wherein the alpha that we are trying to seek literally comes from being long on the stock when the RSI is, I would say, budging, right? So that was the idea, and that is what we had seen yesterday. Today, we will extend this idea and try to build a trading strategy around it, right? And what we will do in this particular session is, like, we'll try to validate the trading hypothesis. That is, like, we will try to see if the alpha that we are trying to seek really comes from the RSI or not. And we try to build a portfolio of we try to backtest it on a portfolio of stocks, and let's see, okay, what is the optimal trading frequency? Like, should we trade on a daily basis? Should we trade on a hourly basis? What? And one of the things that we are going to look is, like, how you can include commissions and slippages in a trading strategy, which is as a retail trader we almost have to be wary of, right? However, the question is how we will be able to do this, or let's say what we will use to build the strategy. And the answer you guys already know, we would be using Blueshift. But now, what is Blueshift? So Blueshift is a platform to research and trade systematic strategies using Python. Or let's say, if you are not much comfortable with Python, you guys can go ahead and use the visual editor that we will see in a bit, and try to come up with your strategies and try to validate your trading ideas. Blueshift is, I would say, it's an instrument agnostic platform. That is, it is able to you guys can run any instrument that your brokers allows you to run, be it futures, options, equities, commodities, forex, right? So we have partnered with some of the brokers that we will see toward the end of the session. So whatever your broker allows you to trade, Blueshift can run it. Blueshift can execute. Blueshift can run and trade on those instruments, right? At the same time, Blueshift is not limited to any particular strategy style. You can very well use any kind of strategies that you can think of, be it factor strategies or be it strategies using technical indicators, or let's say you have some highly advanced concepts like, or say, machine learning algorithm that you want to deploy. Blueshift is capable of all those things. Now, the question really is why we should use Blueshift, right? What are the particular features that it helps me as a retail investor that I can go ahead, like that I can think upon it, right? So two things. On Blueshift, you can research your ideas, backtest them, and take your strategies live with a broker of your choice, right? To put it simply, you can turn your trading ideas into trading strategies. That is what the Blueshift allows you to do, or that is what the Blueshift enables you to do. Correct. Now, in the past two sessions, you guys learned that whenever you backtest any strategy, the very first thing that you would require is the high quality data, the data on which you can trust, right? And Blueshift comes with a built-in data sets on US and on US markets, Indian markets, and forex markets. So that is one of the things that you guys can really be very you guys can really be very free about those things. So, and we have some of the brokers, or we have some of the financial data sets, right, that spans more than 10 years. The second thing is it runs on the cloud, right? So you don't need to install any kind of programming language. You don't require any kind of installation process to run through on your machines. Nothing. Correct. Third thing, whatever you develop, whatever you keep, whatever your idea is, right, it always yours only. So we take IP protection very seriously at QuantInsti and at Blueshift. So whatever strategy that you develop, we, even as a creator, won't be able to see it, won't be able to know it. So this is what you guys can do it. So let me try to provide you some example, right? So what do I mean by these financial data sets and strategy research, right? All right. So that is Blueshift. And on Blueshift, to create any kind of strategy, we follow simple 4 steps. The first step is to have a universe of stocks or universe of assets on which we want to trade, right? Now, the universe can be static or dynamic, right? Now, the example of dynamic is like, let's say I want to trade a universe of Nifty 50. Now, we know that Nifty 50 portfolio can change anytime, right? Though we know that when it will change, but we usually don't know how the Nifty 50 portfolio looked in the past, correct? So all we really need is to have a dynamic filter, right? So I remember yesterday someone asked, right, what if the stocks that we have chosen to trade yesterday, it was based on the RE ratio and some fundamental properties. What if those fundamental properties change? Should we really continue trading those stocks, or should we change it? So the answer is like, we should change it, correct? So Blueshift is capable of those things, and Blueshift implement those dynamic universe using the pipelines. However, for the simplicity of today's session, we will keep our discussion, or we will restrict our discussion towards the static universe, and I will give you the idea how we have come up with the static universe. The next thing is the signal generation, or I can say the sources of alpha. Yesterday we again here we already know what is going to be source of our alpha, right? That is the RSI. So that will go in the second part. Now once we have, let's say, a universe and we know the source of alpha, all we really need to do is to generate trading signals. And once we generate trading signals, we need to take the initial positions, right? Now what if after we have we took some initial positions, right? We need to keep rebalancing it with whatever trading frequency that we decide. So that really goes in the rebalance stage, right? And that is where you would execute your strategies. That is where you would perform the buying and selling of the assets, right? And lastly, as we know that any research process, right, is never complete. It always keeps going. It always keeps on and on. So research and refinement is the ingredient step in having a, I would say, sustainable strategy. Now, how long your strategy would be sustainable, that depends really on asset you are trading or the market you are trading, right? So let's do one thing. Let's go to the platform and see. So if you guys are looking for the first time, right, or you can go to the blueshift.QuantInsti.com and you would see this landing page. All you need to do is like log in into these, click on the login and log in with your credentials. If you are new to here, you might want to sign up, and whatever you do, log in or sign up, right? Once you sign into this platform, you will come to, or you will land toward the page something like this, right? This is what we call as a workspace, right? Now if you are here for the first time, the screen might look something a bit different to you. You would land on something known as the touring guide. If you once you complete the touring guide, you will be able to see the screen that is something similar to mine, right? Now again, you won't see any of these strategies. It would be a blank area here, but no worries. You guys can perform all the actions that we are going to do, and you will see some strategy here then. Okay, so what you guys can do is, I hope you are logged into the platform. If not, I will wait for 30 seconds or so, right? And by that time, let me know if you have anything. So someone asked, does Blueshift have pre-built strategy knowledge base for us to consume and learn from? Absolutely, we do have. So here, here's the. So we will be sending you the link, or what you can do is, right, you can simply search Blueshift GitHub, right, and you will land to the page, and here we have a demo of almost every style of strategy. So here you go, right? Perfect. I hope you guys have logged in already. Now let me go ahead. So okay, so click on this button, create strategy, right? And you will be greeted with this pop-up. Enter the strategy name. So here I would be naming it RSI_test. So you cannot have space in the strategy name, so be mindful of it. And next, select any template that you like, right? So I am going ahead with buy and hold NSE. Correct. You have to choose at least some template to get started with, and then click on build visually. Now Blueshift allows two modes of creating your strategy, or two modes using which you can come up with your trading strategy. That is using Python code, which I leave up to you guys to explore it. Currently we will be going to use the visual way. Once you click on this build visually, you will come up with a page that looks like this, right? Now the screen that you see is nowadays more familiar to the kids rather than the adults, right? Because this is what has been taught to kids when they are learning programming for the first time. However, we have used this particular approach to specifically and molded it specifically so that you can, or we as a retail traders can come up with a trading idea or this trading strategy, right? So what I would do is, I would click on this button here so that I can have more space, and I would again close this documentation here so that you guys can see the things clearly. Correct? All right. So I hope you guys are on the same page. All you need to do is I simply repeat the steps that I have performed. Right. Click on this create strategy button, name your strategy, choose the template, and click on build visually. Right. I won't do it now because I have already created the strategy. So once you click build visual on the button build visually, you will land to the page that looks like this. This is what we know. This is what we call as the editor, right? Now to free up some space, I would simply close this backtest panel here, and I would also close this panel here, right? I hope you guys can see my screen pretty clearly, or should I zoom more? Is it better? Python was way more comfortable. Yes, it might be, but I leave that up to you. Perfect. Okay, so what we will do is, like, so if you see this particular workspace is built using blocks, right? So I can detach this block the way I like it. Correct. And that is what I urge you guys to do. Detach all the blocks and simply press delete on each of them. We simply need to delete all these blocks and we will start from the scratch, right? So your screen should look something similar to this. Someone says I have a zero knowledge of coding. Yeah, Spawn, so you need not worry, right? So that is what you can use this, right? It requires no programming knowledge at all, right? There is nothing that we would be using programming about. All we are going to use is the understanding of the concepts that we had learned yesterday, right? It's almost about the logic that we are trying to build. We won't be using any kind of programming in this particular session. Someone says, so someone asked how to close all those blocks. You simply select on the blocks. So the blocks are something like you click on these blocks, the border will appear, and click on delete. Right. Perfect. All right. So you should see something on these lines. Correct. Now remember, so these are the 4 steps that we discussed. So the first is the universe selection, another is the signal generation, third is the target portfolio, and the rebalancing. So we have these 4 steps listed over here, right? All right. So what you see on this blue box here, or on this blue blue block here, are the parameters that are applied at a strategy level. So let's say what we want to say is, like, we want to use which data set, right? So Blueshift has 5 different data sets: NSE daily, NSE minute, that is Indian market daily and Indian market minute, US market daily and minute, and FX minute. correct? The second parameter is the next two parameters are more from these parameters, right? That if we have an intraday strategy, we might want to limit the number of orders that we can place, right? So in such a scenario, this maximum order per day comes very handy, right? Maximum quantity per order, so how much quantity we can place. So in most of the markets, we have something known as the freeze quantity, that you cannot place more than certain quantity in a single order. So in such cases, we can use this. Now there are certain strategies that only requires you to go long, right? The strategies don't go short, and in that case we set this particular set to true. And then the next two parameters are of the utmost importance, right? That it allows us to set the slippages and the commissions, right? And now these two terms, right, slippages and commissions, are almost every time different for each and every strategy and each and every individual, right? Depending on the geography that we trade in, depending on the broker that we have, depending on the number of instruments that we choose, these two factors, these two parameters depends on a lot many factor. So I would say be stringent with whatever number that you use here, correct? Now I hope you guys have a firm understanding of these 5 parameters that we have seen here. And yeah, so let me go through some of the questions. Okay, so someone says no NASDAQ data set. So when we say we have a US data set, we mean that we track S&P 500 stocks, which includes NASDAQ and NYSE. Can the minutes be like 15 minutes, 5 minutes, 15 minutes, 30 minutes? Yes, absolutely. So Blueshift has 2 data sets. The one is the NSE minute, one is the minute data set, and another is the daily data set. So in case you want to trade using, let's say, 15 minutes, right? What you can do is like you can choose 15 minutes and then set your trading frequency to be 15 minutes. Or let's say if you want to trade on a 30 minutes candle, you can simply go ahead and resample your data and select your trading frequency to be 30 minutes. Correct. Okay. Okay, so someone asked, can we add our own data set? As of now, no, but we are going to open it soon for the public. Okay, perfect. So now let's move ahead and try to define our universe. So what I will do is like I will start with the idea that we had just covered yesterday, right? So again, let me give you the overview of this particular screen first. On the right hand side, on the bottom right hand side, what you see is the workspace controls that you can basically zoom in, zoom out, right? If you click on this button, it will basically center your center your strategy, and whatever block that you want to, let's say, delete, you can simply drag and drop and delete here, right? So this works. So this editor, what you see here is like I would say is merely like the Lego box, right? The kind of a strategy that we are going to create is something very similar to drag and drop approach. Right. So the first thing that we need is is to define the universe. Now you guys see here 4 steps, correct? Step 1 is define universe, and all the blocks that you can use for this step, right, are color coded here. So if you see here the define universe, right, the second step is define alpha. So the second step here is define alpha. The third step here is define trading rules, and the third step here is the define rules, right? And also what blocks goes in each of these section are color coded here. So if you see define universe has a color code of turquoise. If you see here define alpha, they have a color code of pink, correct? So first we need to do is that first we need to define our universe on which we would be executing our strategy. how do we do it? Click on this define universe and click on this first block here, that is set universe to. Pick it up and simply drag it here. Correct. Okay, so that is the first step that we need to do. Now we want to set our universe to whatever assets that we want to trade. The second step is to add those stocks, add those assets. And for that, I again click on define universe and click on asset, the second block here, that is select assets, right? You pick it up and simply drop it here, right? So when you see that the blocks are attached by themselves, right, you should be asking yourself, okay, are these blocks matching to the similar color? Are these blocks of the similar color? Correct. Okay, so I will perform these steps again. I will simply delete them. I will go to define universe. I will click set. I will use this set universe and attach here. I will again go to define universe and select this block. Now I am going to demonstrate this strategy on Indian markets. However, if you guys like, you guys can go ahead and use the NYSE dataset, and for that you guys can choose those of you who want to trade or who want to backtest on Indian markets, they can choose NSE daily dataset here. Those of you who want to backtest on NYSE or the US markets can choose NYSE daily, right? So depending on what dataset you choose here, you would be able to add those stocks, correct? So for NSE daily, I would be adding the first stock to be the, click on this, click here to add, and you would be able to add the stocks. The first stock that I would be adding is the HDFC Bank. Now, for those of you who are working with the NYSE dataset, you guys can choose APL, right? And to get the similar results, to understand each and every aspect in a clear manner, use the stocks that I have used, and I will go through why I have chosen these particular stocks, right? You guys can choose APL, and those of you who want to backtest on Indian markets, that can choose HDFC Bank. Okay, so the next step here is to define alpha. What is our alpha? That is RSI, correct? So now we need to go to this define alpha function, define alpha block, and here I would be choosing the alpha function, right? So click on this alpha function here, and from this alpha function, choose the very first choose the very first block, right? Now the very first block allows us to use any technical indicator. So I would click on this select to click and enter the name of the function. So I want to use this RSI, right? And the look back period that I want to use is 14, correct? Once I click on submit, it will give me the RSI indicator. Now I need to basically keep this RSI. I need to assign this RSI to some variable. So what I will do, I will go ahead and create a new variable by going here on use variable, right? So click on this use variable button and then click on this create variable button. I would be giving the name as RSI. Give name as RSI and click on OK. And you will see two different blocks here. So choose this very first block here, that is set RSI, right? So now what I will do is, like, I will assign this RSI indicator that I will have to this variable that I have created, and then I will simply go ahead and use this variable as my alpha source, correct? Make sure that you keep the frequency as daily, correct? All right, so let me go ahead and let me demonstrate all these steps again. Right, so what I'm doing here is I am simply removing these blocks. Okay, so the alpha function that we are going to use is the RSI indicator, right? Click on this alpha function, click on this first block here, and from this first block, click on this click to select, enter the function name and use this RSI. Enter the lookback period as 14 and click on submit, and keep the frequency as default, that is RSI, that is daily. Now I need to store this indicator to some variable, and I would be going and I would be using the RSI variable. So in case you guys don't see this variable here, simply click on this create variable and create a new variable. Once you create a variable, you will see these two blocks. Click on the first block and drop on your screen. Now assign this RSI indicator to the variable and assign this variable to the alpha source. So this is my alpha source. So we have completed two steps. So the very first step that we did was the universe. The second step is to define the alpha source. Now I need to define my trading rules, right? So what are our trading rules? The trading rule says that we will go long when the RSI is greater than some threshold value, correct? Okay, so that will go here in the third step, that is define trading rules here. So I will go here and basically that is on click on the define rules here and choose the block for enter long, correct? So this block allows me to specify conditions that I need to use for buying a stock, right? So I will go ahead and simply put this block within in the step 3, correct? Now the last two blocks that you see here on the math and the logic, right? The last two steps the last two blocks that you see here, these two blocks are merely can be used for any purpose, that is to define your any kind of logic, and it can go in any four of these steps, right? They are not restricted to any of these steps. They can go to literally any of the steps. So here we need to use the logic, right? And what is the logic? That is RSI is greater than 40. So what I will do is I will click on this logic button here. Once I click on this logic button, I will click on the second block. I will choose the second block here that allows me the comparison operation, right? So it allows me to perform some kind of comparison, right? So I will simply choose it. I will simply go ahead and choose it, right? Go ahead and put it here, correct? What do I want to do? If my RSI is greater than 40, I want to go long, right? So I simply, okay, so now what you need to do, now you need to again go to these use variables and choose this second block, that is RSI block here. We want to use this RSI variable that we have defined earlier. We want to check if this RSI variable is greater than 40, we will go long, simple, right? So we can go ahead and drag and drop RSI parameter here. Now, as of now, we have the threshold value to be constant, right? The threshold value is a constant variable, constant value here. So what I can do is I can click on this math variable. I can click on this math variable and click on this first block here, which allows me to define the constant value, right? And what value should go here? 40. So yesterday you guys worked with 60 and 50. Today we will be working with the 40, correct? And what you need to do is you need to change this comparison operator to greater than, correct? All right, so now that we have defined the entry condition, but now we need to define what we really need to do when this condition is satisfied, right? We need, really, the system does not know as of now, like what happens when this RSI goes above 40, correct? So all I need to do is I need to go ahead and define the rules, or I would say define the actions actually, and actions that I need to perform is available on this action block here, right? So click on this action block here and use this very first block here, right? So this first block allows us to order any stock whenever any particular condition is satisfied. So I will basically drag and drop it here. So what I essentially says here is like enter long when RSI is greater than 40 by the portfolio fraction that I want to invest. I want to invest. Now, what percent of my wealth I want to invest? I can say I want to invest 100%. This number here, right? The number that one here that I have provided is in the percentage terms, right? So if I want to invest whatever amount that I have, right, I can simply go ahead and type in 1 here, right? So this completes my entry condition. This completes my entry condition. So what I will do now, I will repeat through these steps once again. So in case you guys are a bit late, you guys can again have an idea how did I came up with this particular condition, right? All right, so I won't delete this step as of now, this time. I will keep it here, and I will try to build this right from the scratch. Okay, so so at this point in time, we have our universe with us, and we have our alpha source with us. The next step that we need to define is the entry rule. Now, entry rule is basically the third rule, the third step that is defined by the dark blue. So here on the dark blue, that is on the defined rules, I have 4 blocks, each for each of the action that we can perform. So as of now, we would code for enter long condition. So I would drag and drop the enter long. Now, when do I need to enter into a position? When RSI, this particular variable, is greater than 40. So now I would require a comparison block, right? And the comparison block is available from this logic, section here, right? I would be using the second block here, which allows me to compare 2 different values. So go ahead and pick it up and drop it here, right? Now what I want to compare, I want to compare the RSI value. Where do I find the RSI value? In this use variable section. So I can go ahead and choose this RSI variable that I had created earlier and keep it here. What do I want to do? What do I want to check? I want to check if RSI value is greater than 40. And for that, I would require a constant number, and I can get a constant number from this math section, right? I click on this math button here, math section here, and use this constant block here, right? Go ahead and drop it here and type in the threshold value. The threshold value that we are going to use is 40, correct? Now, what should really happen when we say RSI is greater than 40? Okay, we need to define some action. And how do we define the action? Simple. Go to this action button here and choose the very first block here that allows me to place orders in various ways, right? So I would go ahead and drop it here. I say that whenever this condition is satisfied, right, place my order, right, place my order from the portfolio, whatever portfolio that I have, if I have 10,000, if I have a wealth of 10,000, right? If I keep it 1 year, it means that I want to invest whatever cash that I have, whatever wealth that I have, right? And this number is in the percentage terms, correct? We can have a unit value. So unit simply says that how many number of stocks that I want to buy, right? This value says like, okay, for how much value should should this system buy? However, I want to keep it dynamic, so I use the portfolio fraction, correct? Okay, now, yeah, so we are good to go with the long condition. So I hope you guys are able to follow me until this point. Okay, so someone asked, what if I want to invest 20%? So I will come to that point in a while. I will come to it in a while. Okay. Someone asked how to handle multiple alpha factors. Very nice. So what you can do is, right, you can simply go ahead, create a new alpha factor. Let's say I want to use MACD, correct? Or let's say EMA. So simply create a variable, use that variable here, right, and create your new alpha factor, right? I would go here, and I would choose the exponential moving average. I would go ahead and say look back of 10 days, 10 periods. Simply go ahead and this is your this is your another alpha factor, right? This is how you can combine. And now you need to check here in your trading rules how these two different alpha factors work in accordance, right? So this is the example of how you can define multiple alphas. Okay, so we won't be using this as of now, so I am simply going ahead and deleting it. Now someone asked, what how can I is visual programming limited to machine learning, technical analysis, or not really? As I said, you can go ahead and create any type of alphas. So if you go ahead and click on this alpha function, you can see here that we can have technical indicator, we can have statistical indicators, we can have pairs trading here. Functions for time series are also available. You can basically you can virtually select any kind of alpha factors that you want, right? Not only that, you can also go ahead and create your own machine learning models as well, right? So if you and Blueshift currently allows almost all kinds of supervised and unsupervised machine learning models. So you guys can, yeah, I would urge you guys to go ahead and try this by yourself. Right. All right. So now what we need to do is now we need to go ahead and define our rules for the exit. Right. So what do I need to do? I need to click on this define rules, and I need to use this particular block, that is exit long, right? So now I simply choose this exit long button, exit long block here, and simply go ahead, and now I need to define all these same parameters, right? When a strategy should exit a particular stock. So I would be using this same block. So I would right click on it and click on duplicate. Once I duplicate it, I can go ahead and plug it here, right? So our strategy says that exit long when RSI is less than 40. So all I need to do is like I simply need to go ahead and choose simply need to change the comparison operator, right? Whenever RSI is 40, I simply need to exit my position, right? And I would be using this same order by function. So again, I would be right clicking on it and creating a duplicate of it and placing it here. Now you guys remember I said that this is in the percentage terms. So whenever I write 0, it simply means that I want to nullify my position. I want to square off my position if there is any, right? So if there is any position, I want to simply make it null. Simple. Okay, perfect. So now I will delete these things. Perfect. So now that we are ready with our strategy, okay, so the last step here is to basically define the order parameters. Now in Blueshift, the default order parameters are the market orders. However, you want to change it to limit orders and such things, you can go ahead and choose anyone from this particular block, right? However, for the purpose of this demonstration, I won't be changing it to limit orders, but you guys can go ahead and choose this order type from market to limit and then provide your limit price and all such things. Okay, so now I have my strategy ready, right? I don't need to do anything extra. So what I do is right now I can go ahead and simply backtest my strategy. Someone asked, no negatives are allowed for target size. Negatives are used for entering short positions. However, we are not going short in this particular strategy, hence I have not used negatives here. However, if you have a short entry condition, you can like, if you provide like -1, it means you want to short whatever cash that you have. If you write -0.5, it simply means that you want to go short on, let's say, oh, okay, here, right? So yeah, perfect. So now what we can do is right, what we can do is like go ahead and backtest this. So I would start my backtesting from, let's say, 2015, 1st January 2015, and I would restrict my backtest up to end of the December, and I would use my I would have initial capital of 100,000 rupees, right? And click on this. So you need to enter these parameters and then click on this button, run. Once you click on this button, run, it will basically initialize the quick back test, and we will see the output in a while. So someone asked, how can I get an indicator of an indicator? So if someone wants to calculate the moving average of RSI, right? It's pretty simple. You can go ahead and create a new variable of the indicator. Correct. So this is how our strategy might have performed, or let's say we have some evidence that it have performed in this way in this last 5 years. Correct. However, we all know that we never trade any single stock, right? We always trade multiple stocks. We always have a strategy which tracks multiple stocks and which tracks on multiple assets. So what I will do now is, right, instead of using only single stock, right, I will add few more stocks here. So I would be using these 4 stocks for Indian markets. For those of you who are working with the US markets, can use Apple, Microsoft, Amazon, and Google. However, I would be working here with how can I place it here? Oh, let me try to find it. Okay. No, perfect. No worries. You guys can. I will repeat the stocks that I am using. So the next stock that I would be using is Reliance. The third stock that I would be using is the Divisdeb. And the fourth stock that I would be using is the Bajaj Finance. So I would be working with these 4 stocks: HDFC Bank, Reliance, Divisdeb, and Bajaj Finance. Now, those of you who are working with US markets, they can choose Apple, Microsoft, Amazon, and Google. Now, how do I came up with these stocks? So the simple criteria that I have chosen is to go long or to choose these stocks, right, which are in the top, I would say, top 10 market. So whose market cap is the largest in the first 10, right, in the top 10. So this in the US markets, the first 4 stocks, like these are the technology stocks. They have some of the largest market cap. And for the Indian markets, these are the 4 steps who have who are in the I would say first who comes in the first 10 criteria. Okay. So this would be, and remember yesterday we had spoken about selection of the criteria. Selection of the stock is also the source of alpha. So that is why we need to be careful about when we are choosing what kind of universe that we would be trading. Okay, perfect. Now that I have 4 stocks, right, I cannot obviously invest 100% in each of those stocks, right? What I need to do is I need to invest some fraction of my portfolio in each of these stocks. So what I'm doing here is, like, I am defining that, okay, whenever a signal generates in any of this particular stock, right, I would invest 25% of my portfolio. Correct. So someone had asked earlier, how can I go ahead and assign a fraction of my portfolio? This is how you do it. So here, why I am assigning only 25% of the stock? Because I am working with the 4 stocks, right? So I want to ensure that I do not over leverage in my strategy, right? So this is the, however, I can, if I keep it 50%, right, I would inadvertently go ahead and over leverage it, which I don't want. So I can simply go ahead and use 25% that needs to be invested in each of these stocks whenever the signals are generated. Perfect. Now let me go ahead and backtest on the same time duration and backtest on the same capital, right? I go ahead and click on the run and it will backtest. Now the idea here is, or I would say, so someone asked, when does this strategy really executes? So see, we are using the daily data set here, right? So we are working with the daily bars, uh, daily data, daily bars here, right? So this strategy will perform all the operations at the end of day, right? It will perform all the operations on the on the close price. And give me a moment, I will demonstrate how we can change the frequency, right? So we can see that uh, it's literally easy to basically extrapolate your strategy idea from one stock to multiple stocks, right? You simply need to go ahead and define your universe. You really need not write any extra code. You really need not do anything extra. So this particular strategy as of now is backtested on daily data. But now let's try to see like how we can optimize, right? So there are various ways in which we can optimize this particular strategy. Someone asked how can we have a dynamic universe selection? So you can have a dynamic universe selection using the pipelines. However, that I won't be demonstrating it as of now. But yeah, there is a it is available on the platform. So what I will do is now I will go ahead and try to optimize. So, but before I optimize, let me try to give you some of the optimizations that can be done in this particular strategy. So the first thing that we can have is the currently we are using the static position sizing. You guys can go ahead and use your any position sizing methods like Kelly criterion, risk parity, or leverage space theory, and you guys can optimize this number, like what fraction of portfolio should be invested whenever signal is generated. The second thing is the threshold optimization, right? So the threshold that we have used here is the 40, correct? Now, the idea behind using this 40 is like we want to come up with a generalized model, a model that can be used on a universe of large stocks, right? But however, if you guys want, you guys can go ahead and try to optimize this number. However, please make sure that you don't overfit it. The second thing that the third thing that we can optimize is the look back period of the RSI. Here I have used the RSI of 14. You guys can go ahead and try to see what look back period can be used. Again, the fourth point is the asset selection that you guys already know. And the last thing is like, is it really necessary that we need to trade on daily basis? So what I can do is, let me demonstrate a simple idea here. So let's see. Okay, so let us keep it as it is, right? So what I want to do is, my current Sharpe ratio is 1.76, right? Can I do anything that I do not hamper my Sharpe ratio, but I can optimize strategy in a way, right? So what I do now is, right, I simply detach these two rules as of now, and all I do is, right, convert my daily strategy to the weekly strategy. So how do I do it? I simply schedule these actions that needs to be performed, right, on a weekly basis. And how do I do it? By using the block schedule action at available in the scheduling section here, right? So I can go ahead and use schedule action act and keep it here. And when I want to schedule, again, I need to go to the schedule part here. And here is a block that allows me to choose date and time, right? So I can go here and choose it, place it, right? What I want to do, I want to schedule it on every week. Let's say I want to trade this particular strategy on every Monday. So I can go ahead and choose week start. Okay, let me demonstrate again. I can go ahead and enter function at like execute this strategy on every week, and I want to start on the first day. So the offset will be 0, and I want to execute this strategy after market opens and after 15 minutes into the market. So I write hours equals to, 0 and 15 minutes. So it will basically execute my strategy after 15 minutes of the market open, right? I click on submit here, and voila, we are done. Now I can simply go ahead and place my rules here. So now I have a weekly strategy, right? Now, earlier we used to trade or we used to execute this strategy on a daily basis. Now we have scheduled this particular strategy to be executed on a weekly basis. Now let me go ahead and run it here. Right, so until it runs, let me see if we have any. So someone says whether I can whether I can change an overbought and oversold. Yes, we can, and that's very simple, right? That's very simple. So you simply change it to 40 to 70, right? You exit whenever it's a 70, so that becomes the overbought, and this becomes the oversold, right? It's simply changing of a single variable. Okay, perfect. So see, we changed our strategy from daily to weekly, but we see here that the Sharpe ratio is not hampered a bit, right? Earlier it was 1.76, now it's 1.73. And appreciate this fact, guys. Appreciate this fact that earlier we used to run this strategy 252 days a year, right? Now we are running this strategy only 52 times a year, right? So there's a huge difference. The way the strategy is being executed earlier and the way the strategy is executed now, correct? However, even after doing such optimizations, we are not uh, we are not basically hampering, or we are basically not getting any adverse effect on our final results. So this is something that you should be looking for in your strategies whenever you basically say research about it or anything else. All right, perfect. So this is what I wanted to show from the perspective of the backtesting your strategies. Now what you can do is you can click on this new backtest, right? So until now we were running the quick backtest. Now you can click on the new backtest and choose the same parameters. Once you choose the same parameters, run the backtest. When you run this type of backtest, you would have the output that it will show you would be very detailed, right? So currently it is processing. Let us give it a minute. It will convert to completed. Once it is completed, we can see the output, right? Until now, unless then, like, let me see if I can answer any questions. In the backtest execution, can we get the log details? Yes, Tushar, that is what we are seeing here, right? Okay, so now my backtesting has completed. So let me go here, and what you see here is is the very detailed analysis of your backtesting results. So here there are various metrics, performance metrics that we need to we usually see. So I can see the stability of time series is 97, which is quite good. The higher the number, the better it is. It usually stays between 0 to 100, correct? And these are all the parameters. This is an important sheet, right? The tire sheet. So here in the tire sheet that I can see that my strategy has not over leveraged in past 5 years, right? And this is how my returns distribution looks like, right? So if you see, this is how my returns distributions looks like. Again, if we go and if we see the strategy volatility, right, we can see that in the initial phase when the rebalancing was happening, the volatility has moved up quite, but that's okay. Nothing to be worried about. But then after almost for more than 4.5 years, right, the volatility has stayed constant, correct? And in the past 5 years, we have seen all the phases of the markets, and this is the drawdown, right? So we can see that it has performed quite well in the COVID duration as well. And in the here we can see the monthly performance. So if we see here that the green blocks which you see here, they are the 18%, and the red blocks that you see are the 17%. So though we see more red blocks, the quantum of those returns, right, negative returns are quite less. Perfect. And the final thing that I want to show you guys is the transaction one, right? So here in the transaction tab, right, you guys can see whatever transaction that the Blueshift has performed to backtest your strategy. Correct. Someone asked, like, is this the backtest report for 4 stocks which you chose? Yes, that is correct. So we can see all 4 stocks here, like Bajaj Finance, Divi's Lab, HDFC, Reliance, and all such things. And we can see that, okay, on this particular date, Blueshift bought 7 quantities in this particular stock, 14 quantities in another stock, and all such things, and the price. The good thing here is you can download this backtest result and use your analytical techniques the way you like, right? If you click on the download, you would be able to download all these performance metrics and all these transaction sheets, right? So do use it. And lastly, there is a exciting feature, that is the share. Once you click on share, you guys would be able to share your backtesting results wherever you want. Even if you want to embed it, you can. If you want to share it on the social media, you can. However, the thing to note here is, when you share your backtesting results, the code portion, right, the code for your strategy won't be shared. It would be hidden. Only these first 5 tabs would be shared only. So you guys need not worry about your strategy idea being stolen. When you share, this code part won't be shared. Correct. All right, guys. So this is what about the performance analytics. Now, the last thing that I want to show you is, let's say I am pretty happy with my strategy performance. What I can do is, what I want now, if I want to take this strategy live, right, what do I need to do? Once I backtest my strategy, all I need to do is I need to simply click on this go live button. Once I click on this go live button, pop-up will appear on your screen, and it will say that, okay, so these are the changes that the Blueshift platform needs to make. Now understand this, guys. This is really very important. In the current scenario, like I would say the conventional way outside the Blueshift, right? What we usually do, we usually have a backtest algorithm and the execution algorithm, right? Those 2 algorithms are separate. So let's say you are working with your strategy, something similar to what you did yesterday on Jupyter notebooks, right? So you guys write your code to backtest your strategy on Jupyter notebooks and something on those, right? And you come up with the strategy. Now, when you want to deploy that strategy with any broker, right, what you need to do is, right, you need to convert your strategy. You need to write a whole new algorithm using the API provided by your broker, or using the API provided by the exchange where you want to deploy. Correct. So these are the 2 different algorithms. One is the backtesting algorithm and another is the execution algorithm, right? However, with the help of Blueshift, we are able to combine those 2 things into a single algorithm. You guys need not worry about creating or writing your execution algorithm separately. All those things are being taken care by the Blueshift platform, right? You simply need to worry about, or I would say you simply need to focus on your strategy creation. Rest of everything will be taken care by the platform, right? And that's the mate here. So what you guys can do is, here is click on this accept and execute here, right? Once you click on accept and execute, you would be redirected to a new platform, new page, right? Wherein you have to perform some, you have to configure some parameters, right? However, today being the Saturday, I won't be able to perform those things. So what I will do here is, I will basically share this video with you, where
Welcome to this video.
What all parameters that we need to choose is demonstrated here. So let's see. So this is what we had seen until now. So let me maximize it. Okay, so we had seen what we need to do on here. We click on this accept and execute. Once we click on this accept and execute, we would land on a new page, right, which will look something like this. Here you have to configure your settings. That is, you have to choose your brokers, you have to define your algorithm parameters and all such things. Okay, so the first thing that you need to choose is your broker. So go ahead and okay, so the first thing that you need to choose is the risk management systems, right? Whatever the row down limit. So this can be thought of as the kill switch. If your execution or if your algorithm goes beyond certain limits, right, you want to switch it off, you want to simply stop it. So that is being done using this first step. The second step is to basically select your broker and the algorithm, right? Here on the broker part, you simply need to click on this add new broker, right? Excuse me. And you can see use it for paper trading with FXCM and Alpaca. And for live trading, you can use Master Trust, FXCM, and Alpaca. Now, the thing to understand here is like Blueshift is very well capable of paper trading. However, as of now, the paper trading is available for Alpaca and FXCM only these two brokers. So you guys can go ahead and use it. Then once you click those brokers, once you select those brokers, you simply need to choose the capital that you want to deploy in this particular algorithm, right? And later, you need to choose the order confirmation mode, right? Like Blueshift supports two order confirmation modes, auto execution and one-click notification. And that's it. Once you do it, once you choose it, right? Once you accept the terms and conditions, you confirm it. And once you confirm it, you will receive something come to something known as the algorithm execution page. Once you so it would look something like this. Click on it and it will show you all the positions that you have, the trades that your algorithm has placed, the console, right? What Blueshift is doing, whether it is connecting, how it is connecting, and all such things, right? The important point to note here is, right, all this execution happens in the on the cloud. You guys need not keep your machines on when you want to execute, right? Once you deploy your algorithm, once you schedule it, it will run on its own. If you want to go, you can simply go ahead and take a break, right? All right, guys. So that's it for me. That's it. What I have for you in the store. Any questions? Anything that I have? Over to you, Pawan.
All right, great. Thank you so much, Jay. It was actually really, really great to see live strategy being created in front of our eyes, right? And the best part is for the people who actually do not have any background in programming, it is still possible for them to actually create a very, very sustainable strategy. And I think this was actually the best applications of all the learnings we have got in the past 2 days. So thank you so much for taking such a wonderful session, and we have received some great feedback as to you have explained it really, really well and in the best way possible. So thank you so much for that, Jay. And what I'll do right now is I'll just take up a few questions, and if you could answer them one by one, we'll just once the Q&A is done, we'll just conclude the session then. Yeah.
Yep, sure.
All right. So we have the first one from Satya. He asks, what is the characteristic of the backtest data available? Will it be end of the day data? I believe it is. It can be changed, right? Yeah. Over to you, Jay.
Yep. So as I explained, right, currently we have 5 data sets available on Blueshift. Indian markets, minute data and daily data, US markets, daily data and daily minute data, and FX minute data. So we have these 5 data sets, and these 5 data sets can be used in a way we like. Correct. These,
Okay.
so if you want to trade, let's say 30 minutes bar, right, we can use this minute data and resample it to 30 minutes. Correct. If you want to say trades a monthly strategy, we can use the daily data and resample it to monthly data. So Again, this is a really good question in terms of like, it also tells that, okay, on Blueshift, as things stands, right, the highest frequency data that we have is the minute data, correct? So I would like to point here is that Blueshift is not an HFT platform, right? It's built on Python. So these are the different data sets that we have, and we can use it the way we like, right? To be honest, creativity is the limit, right? You can basically go create almost any kind of strategies that you like, right? It really depends on how well you understand the logic, how well you understand the asset that you want to trade, how well you understand the markets, the strategies.
Perfect. That
Yeah.
makes completely great sense, Jay, I would say. Right. So I hope that answers Satya's question. The next one is by Sunny. He asks, can we set up a deep learning model or upload it to Blueshift for our strategy?
Deep learning models are so we kind of support it, but it is available through the Keras API. So yes, the answer is yes.
Understood
You can go through these machine learning here, and there are quite a few examples on the Blueshift, I would say, playlist as well. So it would be great if you can go to the Blueshift demo strategies here, and you would find like how we can do such things.
Perfect. So the next one is by Neha. She asks whether or not we can add transaction and slippage costs to the strategy. I believe yes, right?
Yes. So here they are, right? Here I can write like, say, if I know that I would be paying something like, say, 50 cents per trade, right? I can set my slippage accordingly. I can set my slippage also. Okay, if I know I would be paying, like, say, 10 cents per share, right? So this is how we can do it. How we can set it.
Understood. So I think whatever rules we want to create, it is pretty much possible in the platform.
Very much. You have got that absolutely right.
Yeah, exactly. So yeah, that's great. Now the next one is by Ved. He asks, does it support visualization features like Plotly for debugging the code?
For debugging, that's usually done through the print statements as of now. However, we are going to add some more supports going further. However, if you want to debug your strategies, you can use these logs and error tabs that is here, that which I haven't shown in this particular demonstration. But you can usually go ahead and use the print statements and perform all these things, right? And it will appear in the logs.
Understood that. All right, great. Next one is from Dhruv. He asks, how can we take ATR indicator as stop loss and take profit levels?
Oh, perfect. So see, so the first thing to understand is like you simply need to create those using alphas, right? So here we have various indicators. So you simply go ahead and create the ATR, right? Let's say 21, correct? And now what you need to do is, right, you simply calculate these prices based on this ATR, and then you go to action here, right? And use it, set your order actions here, correct? And instead of percentage, use these prices, and instead of this target variables, right, you simply create a new variable of it. So let's say I would be using the same okay, ATR. No, sorry. Yeah, I would use it. I would create my ATR here, right? I would go here and use it, right? It's that simple. Same way, I can go ahead and use the stop loss. This was the take profit. Now this was the stop loss.
Makes
Correct.
sense.
Same way.
Got it. So this is not a question, but Anmol mentions that you have taken an amazing session, Jay, and he absolutely loved it, and he is looking forward to implement and make his strategy live. So
Sure.
we are we are really glad about that, Anmol, that you found the session really helpful. And if you get stuck somewhere, please feel free to drop in an email to us. You can just drop in any sort of query you have on contact@QuantInsti.com, just in case you get stuck. We'd be more than happy to help you out on that. All right. So the next one is by Kaushik. He asks, do you provide any learning platforms or programs? So I think, Jay, I will be able to answer this question.
Sure.
So Kaushik, I would say yes, there are multiple learning resources which are available on QuantInsti, right? So the first one is Quantra. So Quantra is a self-paced learning module wherein you will be able to access courses which are short in nature and very specific to a particular strategy or a concept. So if you are more keen towards self-paced learning, then Quantra is the option for you. Then we also have a lot of resources on our blog, right? So you'll find tons and tons of useful material on our blog. So the link to it is blog.quantinsti.com. I'll drop a link to that in the chat as well. And finally, the other resource which we have is the executive program in algorithmic trading. So it is a certification program, I would say. So if you want to delve really deep into learning algorithmic trading, and you want to pursue it as a career, or you want to set up your own trading desk, or you want to rather upgrade your trading skills, this is the program for you, because it covers each and every aspect of algorithmic trading, right from the basics to the most advanced level. So even if you would not have any background in programming, you would be able to learn it from the scratch. So we provide these primer resources which help you build your foundations clear first. We build your basics really strong, and then we move ahead with the core learning which we have in the program. So it is a very approach to learning algorithmic trading, and a very systematic one. And we have students coming in from about 70 plus countries across the globe. And yeah, I mean, even if you look at the reviews of EPAT, which we have got, you will be able to understand the depth of the program, right? So what I'm going to do is at the end of the session, there would be a survey form which would be floated to each one of you. So if anyone is interested in knowing more about the program or any other learning resources for that matter, you can pretty much type in the survey form, and our team would be getting in touch with you accordingly. So I hope that answers your question, Kaushik. Now, the next one is by Raj Sekar. It is, can we trade in NSE FNO segment in intraday or positional?
Yep, very much you can. So as I said, during the as I said earlier, right? The Blueshift platform is instrument agnostic. Whatever instrument that your brokers allows you to trade, Blueshift can trade it. So to answer your question, yes, it is possible.
Perfect. Now, the next one is by Arkadeep Haldar. He mentions, in case auto trade is not selected, where do you get the order confirmation notification? Is there any sort of alert acceptance available on mobile?
Yeah. So here you got on the currently the notification comes on the web only. So here's the page, my trade alerts. So you guys can see all the past and the pending trade alerts that you see. And at the same time, you guys can go ahead and configure Telegram here, wherein in that case you would receive the notifications there as well. So I believe it's somewhere here, but yeah, that's available, right?
Perfect.
So yeah, so
That
here,
is
right?
great.
So,
Right.
correct. So send alerts for live trading, and it's available in the Telegram.
Perfect. So I think that is very much possible.
Yep, very much.
Yeah. So I think we pretty much have covered a lot of questions. I think I'll take the last three, and then we'll conclude the session, since we are having a time constraint, right? So someone asks, what is overfitting and how to avoid it? I believe that is over optimizing your strategy, if I'm not wrong.
Exactly. So there is a fine line between optimization and overfitting, and that really comes with the. So again, so I would keep it very short here. So what generally traders try to do is like when they are backtesting their strategies, they try to optimize these parameters. So in such a way, right, that their returns are keeps on increasing, right? But actually, that's not the case. Such things work perfectly fine in the backtesting part, but when you really paper trade it or take it live, right, you don't see the similar results. Why? Because the parameters that have been optimized, right? And as you said it correctly, it gets over optimized, right? You are specifically telling that, okay, if a money is being generated from here, you keep that thing only. But no, that's not the idea, right? So that is why the concept that I had chosen 40 today, to just demonstrate that we want to come up with the generalized model. We don't want a model which can only trade a particular asset, right? That's almost that is something I would say to be wary of, right? So that's the however, these are not the technical details. These are just the intuitive understanding of what over optimization or what an overfitting is.
Perfect. So I think, yeah, so there's one more by Wade. Does
Sure.
it support visualization features? I mean, I think we already took that question. Sorry for that.
Mhm.
Can new indicators be added in the indicator drop-down menu if there are no presently indicators available? This is by Abhijit.
So okay, so there are two things. Either you can create your own indicator using these math and logic blocks that are available here. If you are a Python programmer, if you know Python, obviously you can go ahead and simply you can code the way you like, right? Uh, Now, if you're not able to create, which might not be the case, what you can do is like you can surely reach out to us and like tell us like, okay, what indicators do you want, and we would be more than happy to look for that.
All right, great. So I believe then they can actually just drop in an email to us on contact@QuantInsti, and then we can
Sure.
accordingly take it home. Right?
Correct.
All
That's
right.
correct.
Okay, so one last question. This is by Michael. Does EPAT or does QuantInsti provide placement assistance as well? Michael, yes. With the EPAT program, the placement assistance is pretty much there, right? And it's for a lifetime. So even after you graduate from the program, probably say 2 years, 3 years, 4 years down the line, you want to find a job or anything of that sort, you can pretty much have those placements assistance in the future as well, right? And as a matter of fact, we have about 170 plus placement partners across the globe now. And yeah, so EPATians constantly get various job opportunities, even internship opportunities are available, and even remote job opportunities are available, right? So EPAT students, yes, they do get placement assistance once they graduate from the program. And what I'll be doing is, since there are some questions about the program, what I'll do is I'll just drop in the link to the program which will give you all the information about it. So I've just dropped it in the chat. And if you want to look at the placement assistance, you can go to this particular link, which I'm sending right now in the chat. So please do have a look. So this is it, I think, Jay. So I think we have covered quite a few questions. Even during the session, you were taking up some decent amount of questions. So thank you so much for that. And most importantly, I feel that a lot of people have actually got a lot of value from this session, because this is something which not a lot of people cover, right? Executing a live strategy and making others do it on the go. So this was something which stood out in this today's session, and I think it was the best way to end the 3-day workshop. So thank you so much for that, Jay. And it was thoroughly my pleasure to host the entire 3 days of workshop, and I hope you enjoyed it yourself as well.
Definitely. Thank you, everyone. Thank you for being such a wonderful audience. Yeah. All right, guys. Thank you.
Great. Thank you so much, guys. Cheers. You take care. Have a great weekend. Bye-bye.